Greetings. Now, one of the themes of this channel is to provide people with finance education, but not just personal finance, but also high finance. And in this case, finance of the tech industry. Everyone knows how much money the tech industry is making. So here's your opportunity to learn about things that you cannot easily learn from the internet from a Silicon Valley veteran such as myself, who is kind of in the epicenter of all of these things. I teach at Stanford University and am involved in some of the hottest startups. So what is a unicorn company? That's a rather odd name if you think about it. But a unicorn company is one that a few years ago was designated as being a private company, a private tech company, that has more than $1 billion in value. Now at that time, $1 billion was still relatively large, and I'm talking as recently as 2012, 2013. Since that time, that is a relatively common thing, and all sorts of companies that truly have nothing in the way of a functional product, let alone significant revenue, often have valuations at or above this level simply because they represent an outside chance of achieving a really big disruption, and I'm going to talk about that. So at the moment, you see this list of CB Insights unicorn companies, and this is of course going to be in the description box below, and it is a worldwide list, as every such list should be. And the total number of unicorn companies worldwide is 981, and the total cumulative valuation is 3.22 trillion. Now remember, this number continues to rise, but there's a lot of graduation out of this list. When a big private company has an initial public offering, an IPO, and goes public, then it actually comes off of this list. So companies such as Airbnb, Uber, Palantir, Snowflake Computing, Zoom, and a whole host of others were on this list and near the top of this list, and they graduate out of this list, which therefore reduces the cumulative valuation of the private company roster by that amount. So a few $1 trillion has graduated out of this list, and new ones continue to graduate out of it as IPOs continue to happen all the time. IPOs slow down when there is a market correction, of course, and the valuation of many of these companies will get revised downward. They have what is known as a high beta, in that they rise more than the market when the market is rising, and they fall more than the market when the market is falling. But as you know, we are in an age of the atom thesis, where quantitative easing is absorbed by technological deflation, and whenever there's a market correction, they keep having to do more quantitative easing just to keep up with that exponential gradient. So a lot of downturns will be shorter, at least in calendar time, than one has previously seen. And that is my expectation. We'll see how that shakes out. So onto this list. It's in descending order, and you can see here the company name, the valuation at most recent pricing. Remember, a lot of these companies only get a pricing change every 6 to 12 months or so at the time of a new funding round or other significant event. They don't change their value every day like a publicly traded stock. The date they joined this unicorn list, so the date on which they crossed $1 billion in valuation, and this date is interesting because we can see how quickly they went above 1 billion versus not. There's considerable variation in that. The country, the city, industry, and select investors. This country is interesting because then you can see how many countries have a certain number of unicorns versus others. And so we'll look at all of these. Then you see the biggest ones. ByteDance, of course, is the Chinese company that produces the TikTok platform, which of course I don't use, but is supposedly doing very well. And then Spacex, the Elon Musk space company, is still a private company, $100 billion valuation. Stripe is a fintech company that deals with payments. Klarna, Epic Games, and so on. You go down the list. And you can go all the way down this list, 981 companies. And at the bottom, you have the ones that are exactly 1 billion, 1 billion, 1 billion, 1 billion. And not only have you probably not heard of most of these, but you probably have not heard of ones even in the middle of this list. This, of course, is a very long tail distribution. The majority of the companies are towards the lower end of the list's valuation, yet above the cutoff, and that is to be expected. You can judge how many each country has. Like, for example, if I just do a Control F and do United States, you see 498 companies in the United States. So the United States is almost exactly half of all these unicorn companies. And all of the highlighted United States search terms are in the right column. You could similarly do one for China, but some of the investor names are also China, so we'll take an adjustment there. China has 271, but not all of those are actually in this country column. Some of those are in this investor column, so you have to make an assumption about taking some of those out. So if we say that 1/3 of these are in the investor column and only 2/3 count as being the country under the search string, then China has about 180 unicorns. And you can do this for other countries as well. You can search for the frequency of certain investors, certain big name venture capitalists. You could do a search that shows how often they appear in the unicorn list. But there are other things that are very interesting here. Look at the sectors represented. Stripe and Klarna are both fintech companies. SpaceX is a space technology company, but that's Elon Musk. He's in a class by himself. And this date joined thing is interesting because if you take a company like, say, Epic Games, it only crossed the 1 billion mark on October 26, 2018. So in a little over 3 years, it has gone from 1 billion to 42 billion. Now, reaching 1 billion is already a big success. But 1 billion to 42 billion additionally took only 3 years. And similarly with Databricks over here, it crossed the $1 billion mark on February 5th, 2019, and therefore in less than 3 years, it's gone from 1 billion to 38 billion. This, of course, is in the US date convention of month first, then day, then year. Now, some of these companies are highly innovative and have disrupted major markets, but others have gotten on this list on weight of their PR and marketing efforts. So it's 10% innovation and 90% PR and marketing and driving up media hype. And it's very difficult to parse which is which in many cases, but recognize that is also a dimension here because the hot new tech company is an evergreen story for the media and something that the media makes money from by promoting and touting. So this becomes a self-reinforcing thing in some cases. But all of these companies being high beta, if the S&P 500 were to correct 20%, then all of these companies on average, I would expect them to correct 60% or more. And this list would shrink considerably. Many would still be of quite high valuation and they might make all-time highs relatively shortly thereafter that, but they are all high beta, and that is not to be forgotten, particularly in a situation where we have not had a large stock market correction for some time. Now, if you are looking to get into the tech industry or are working in the tech industry, this is where you can find out if someone you know is working at a company that has reached unicorn status. You go to this list and search for the name of that company. And if your friend joined that company and it's worth 2 billion now or 5 billion now, and judging from when they joined and what level they joined, these are also important variables that determine whether that person actually made a lot of money or not. You can assess whether that person has come into a lot of money or not. This also is a way to sharpen your job search by saying, hey, I only want to go to companies that have reached X valuation and have a lot of funding and are of a certain size. This is how you can refine a job search in relation to those specifications, no matter what country you're in. And of course, in a Zoom-based world, a remote working world, you can aspire to work at some of these companies even if you don't live in a city that has a disproportionate concentration of these companies. Remember, telework is now permanent, as I often speak about on this channel, and this video over here is just one of the ones where I speak about it. That is something you should take advantage of because now you can apply for jobs at these companies, assuming you have the right qualifications and all that, without having to relocate to where the head office of this company is or was. And that is fantastic. Now, the interesting thing about this unicorn cutoff of 1 billion is that from the dot-com bust starting in 2001 all the way up to 2013, $1 billion was still a relatively large number. Many companies went IPO even before $1 billion. I myself was working at a company called Netgear, which a lot of you are familiar with. They make those home networking equipment products as well as some business class networking products. And I was present there when they did their initial public offering in 2003, summer of 2003. And I made some money from that, but I was rather young then and only a mid-level employee. And the market cap then was $500 million. And forget 2003, all the way up to 2013, a decade later, the tech industry was still digesting the excesses of the dot-com era and confidence had not returned, and quantitative easing was still a relatively new thing, and $1 billion was still a big deal at that time. But now it's so common that there's 981 private companies above $1 billion worldwide, not just in the US. And that doesn't count the biggest successes from this list that have graduated to be public companies, including the various examples I mentioned. On this channel, you will see videos about Roblox, about Robinhood and their IPOs. which you can search for in the channel search, and how I discuss their departure from this list. So trillions of dollars have already graduated out of this list. The new companies also keep coming in, usually at the bottom, but not always at the bottom. Sometimes the company goes from being 800 million all the way to 3 billion because of their financing round. So they enter this list at 3 billion, even though their previous pricing was at just 800 million. Now, in a private company, you can judge what sort of funding they have received. So take Databricks, which is a data platform company. It's trying to call itself an AI company, but I'd say that's a stretch. That's just something that a lot of people are doing these days. And we're going to look at its funding. So we go to a different website for that called Crunchbase. So you look up Databricks in Crunchbase, and it gives you a lot of the basic information, where it's headquartered, how many employees it has, and total amount of funding raised. So while it's worth 38 billion in this extreme bull market right now, it has also raised 3.5 billion of funding. It also has a large number of employees. Let's say it has 1,500 to 2,000 employees. This range is pretty wide, but let's take a logarithmic median of this range, and I happen to know that's about 2,000 employees. So they're probably still not profitable. They've taken this much money because their product and their service offering is not yet enough to be profitable, even with this much runway. So can this company truly succeed long term? That remains to be seen, but it does not represent a super disruptive innovation. In my opinion, as an artificial intelligence expert, it represents somewhat incrementalist improvement on the old paradigm, faster horses, so to speak. But this is how you can look up the funding rounds of the company. So you go to this financials tab, and you can do this for any company on that list, and also for companies that are below 1 billion, by the way. No reason you can't do that. And these are the dates of its various funding. Series A, 2013, Series B, all the way up to Series 8. So a lot of funding rounds across a 9-year period. It's still not a public company, but let's see what happens. By many accounts, a 38 billion valuation is a big success, but by taking in so much funding, there's so much dilution that a lot of the early employees are not going to make as much as you may think. They're very dependent on this $38 billion number. Now, if they own 1/10,000th of the company, and if it's 38 billion, so fine, they still make 3.8 million, but that's the product of 9 years of work and so forth. That is good, but in Silicon Valley terms, that is not a lot at all. If you saw what a $3.8 million house looked like in Silicon Valley, then you would not be impressed at all. Plus, that is pre-tax. They're going to have to pay 55% plus tax on that gain, depending on how they sell their shares or exercise their options or so forth. So I'm going to have more videos about this sort of topic as people want to learn about the finance of the tech industry, this mysterious world of venture capital, startups, IPOs, and how those tech entrepreneurs that you've never heard of suddenly become very wealthy, become billionaires in some cases, and how you can keep track of colleagues you might have known from your college days or from early in your career that have joined one of these companies and maybe have made it big. Because if you've worked for enough years, you probably know 500, 1,000, 1,500 people that you worked with. And some of them might have worked at some of these companies. They might have joined early enough or at a high enough level that they have made it big. And they made it big by joining a company, not by being the founder of a company, but by joining a company. One of the few examples in the world where someone can become wealthy without being the founder of a company. That is what the tech industry has enabled. And under atom principles, these economics are spreading to the rest of the world as well. The dollar gains are very disproportionately concentrated, of course, and that is one of the things that the Atom set of policy recommendations seeks to correct and modernize and upgrade so that there's more collective wealth created. But at the moment, this is where we are right now. The unicorns succeed. The government keeps trying to increase the tax rate on these companies, but there are many loopholes under which the biggest shareholders don't have to pay any income tax, but the rank and file do as well. And I'm going to talk about that in other videos in addition. So a lot of different topics, but these are two websites that you should look at, and certainly most of all the CB Insights unicorn list. You should check back over there from time to time if you're interested in the emergence of new high-flying tech companies and how companies that are 100 billion or 200 billion in valuation today, but that nobody had heard about even 3 years ago, such as Snowflake Computing or Zoom, where they showed up first. This is a good place to keep an eye on the potential for rising stars. If you found this video to be informative, I encourage you to subscribe to this channel, and thank you very much for watching.